Welcome to Alpha Bets, a weekly conversation where me, Ross, and Pat look at consumer-facing companies and try and pull apart the different drivers to understand a business's success or failure. Ross Klein is the CIO at ChangeBridge Capital, and Pat Connolly is our resident stock detective. Today we are talking about Peloton. And specifically, we wanted to start off the conversation about Peloton's management. We are unsure of if we should trust management because of the recent earnings and about the capital allocation that they're doing. So Ross, should we trust Peloton's management?
A great question. We'll jump right off. So if we go back and look at the last quarter, right? This was a company that reduced guidance meaningfully. They missed expectations and they said that they wouldn't need capital for some time. Some time turned out to be a few weeks. They had either poor visibility for the last year as to what was going to happen, or they didn't think it was going to be this bad, and they just waited to raise capital at the wrong time. Either way, there's a problem. That's the short-term consideration. Long-term, we have totally different things to look at, but short-term, we do need to make a decision. Are they poor capital allocators based on this recent decision, or is there just very, very low near-term visibility in this business model?
Nice way to put it. I mean, I'd almost say it's, are they lying or do they not know what's going on?
That's putting it bluntly, yeah.
Pat, do you have a view on management?
No, I guess I'm a little more forgiving than everyone else. Like, I still look at the numbers. I still like the underlying trend of subscription growth going up. I like the underlying trend of connected fitness being a new paradigm in overall fitness. Yeah, I guess I'll just put a little asterisk next to this last quarter and just keep going forward. A couple months ago in the middle of COVID, they didn't have enough inventory. They had long lead times for their product. And then all of a sudden it seemed like they had too much inventory. And then that's when they had reduced guidance. So like Ross says, maybe they just don't have the visibility into just how much demand there is or how quickly demand will come. But I still like the underlying trend. Just kind of comes some slack.
Ross, long term, does Peloton have a moat?
Yeah, so that's the key question, right? If we think about long term, do they have a moat? What are the margins? And what's the addressable market? I'm of the belief that they do have a moat. The average user uses a Peloton bike or a treadmill 16 times a month. The boutique gym economics make no sense compared to 16 times a month at home. You are breaking even at 3 fitness half-an-hour routines on Peloton every month, and the average user is doing it 16 times. It is a great economic proposition. They have a library. There's a network effect. They have a huge content lead and a great product. I think there's a moat, but I don't think they have any idea of what demand looks like near term or even medium term.
Pat, any thoughts on churn or classes per month or subscriber growth, all kind of leading into the type of moat that Peloton might have?
Yeah, I mean, I look at it, I agree. I think the network effect is part of the moat where you can ride with your friends, you can message your friends in the class. There's a weird connection between people and the instructors. Like, one of the instructors was on Dancing with the Stars. So there's kind of a crossover between like your fitness life and what you like to enjoy on TV. So Peloton is like the go-to brand for connected fitness, and people like the content.
Ross, is Peloton just a social network with the guise of being a fitness manufacturing company?
No. Why would they pretend to be a fitness manufacturing company when they could be a social network? I'd much rather be a social network than a fitness manufacturing company.
So they should market themselves as such if that's what they are. They think they are a bike maker, but they maybe should be a social network.
They're a remote exercise delivery platform. This business, I don't have to go to the gym. I don't have to see other people. I can go into my living room or my bedroom or wherever in the house and get in a workout. It's $30 to go to a Barry's Boot Camp or an Orange Fitness or wherever. I can do this for cheaper. It's more convenient. It costs me less money. It's a quality workout. There's a good product here. And the customer churn is so low historically that I think people recognize that. But when you bring on, the amount of demand that they brought on during COVID, you're going to have some hiccups along the way. This was just so much more extreme than anybody could have expected in such a short period of time. As Pat mentioned, you went from having not enough inventory 6 months ago to massive discounting today. That's a 180 turn that nobody could have possibly expected, and certainly management did not.
Pat, is there a library content lead here?
It'd be tough to say because it's not really my like I'm not really the customer. I'm not really looking for spin classes. But yeah, it has to be some sort of thing where if people follow the instructors on Instagram, people want to engage with it. There has to be some special sauce where people just love the content.
So you might not have a Peloton, but Ross, you are a user, correct?
That's correct.
Are you happy with their content library?
Yes.
What's your favorite workout?
I do the spin classes. There was a Foo Fighters routine recently that I loved. I could probably do that over and over.
Oh, that's great to hear. So the total addressable market, what do you think that could be for Peloton, Pat?
I think people are looking at it as if it's like mutually exclusive, where you go to the gym or you get a Peloton. I really don't see that to be 100% true. I think Peloton's kind of like a cardio outlet where they focus on, they have got the airboxing now, like the treadmill. It's real cardio based, and the gym's like weights, you're deadlifting, you're doing whatever. So it's not really a full replacement of the gym. It's really like a supplement to gamify your cardio, in my opinion.
Ross, what do you think the margin profile is and can be as Peloton grows?
I mean, at maturity, this is 90% subscription at a 70+% gross margin and 30+% operating margin model. The hardware business will always be lower margin. We'll get to a point where that's just a recurring, every 6 years replacement cycle type business. But I want to go back to Pat's answer. Prior to COVID, there were 20 million Americans who went to a boutique gym at least once a year. That's a 20 million American sub, or addressable market sub, plus the amount of people that are now going to use Peloton because of what they experienced for the last 18 months during COVID. I think they've expanded that addressable market. I don't think there's going to be a high churn. If you think that 20 million people is reasonable and accessible, that's a $10 billion annual revenue opportunity for this company just in the United States alone. Now, there's no question there's a huge TAM. It still gets you back to, do you believe that they can get there, and do you believe that management is the team to do it and not be heavily dilutive on the way there?
Time to talk to the stock. It's down 68% this year. Yeah, that's the face I've got, Ross, as well. So Pat, Ross, both of you, I want the quick take. Are you a buyer here? Pat first.
Yeah, I definitely am. I see the subscription model. It seems like it's really durable revenue. There's definitely some pricing power there potentially if people are using the classes that much. And if their friends are on it, they don't want to switch, and you're kind of locked in if you have the bike. So it does seem like there's pricing power, and it's durable. We'll see in a few years if the people who bought their bikes finish paying them off, if they start to churn or not. But we can track that.
And Ross, what do you think of the stock? Are you a buyer?
Depends on the investor's time horizon. If you're able to hold your nose and close your eyes and not look for a few years, I think it's really interesting. If you're worried about near-term performance, it's awfully hard for you to convince yourself to buy a company where the management probably doesn't have any much more information than you do about what the quarter's going to look like.
They don't know much more than you. Awesome. Well, thanks for your thoughts. Appreciate the time. And come back and see Alphabets the next time we check in about Peloton and other companies. Thanks so much. Leave your comments in the comment section below and questions, and we'll try and get to them. Thanks a lot, everyone.